Welcome back, everyone, to our ongoing financial check-in series. I'm absolutely thrilled to have you here today because we're breaking down a really highly anticipated release. We're looking at the National Statistics Bureau's first quarter 2026 Gross Domestic Product Bulletin for Bhutan. If you love tracking the pulse of an economy through clear, structured data as much as I do, you're in for an absolute treat with this explainer today. So, the big question we're tackling right out of the gate is how exactly is the economy shifting in 2026? We're not just going to skim the top-level numbers here. This explainer is designed to really track the underlying health and the major structural shifts happening right now in Bhutan's economy. We're going to see exactly which sectors are pulling their weight, which ones are losing a bit of steam, and even peek behind the curtain at how the National Statistics Bureau actually compiles this fascinating data. Let's hit you with the headline figure first. In the first quarter of 2026, Bhutan's gross domestic product at constant prices posted a moderate year-on-year growth of 5.78%. Now, look, growth is almost always a good thing, right? But context is absolutely crucial here. That 5.78%, it's actually a deceleration. It is a full 2.02 percentage points lower than the growth we saw in this exact same quarter back in 2025. So, yes, the economy is growing, but the pace has definitely cooled off a bit. Okay, let's dive into this and look at the total estimated GDP value, but this time at current market prices. For Q1 2026, the GDP was estimated at a whopping new meg 69,453.22 million. To put that into perspective, that's up from just over 63,396 million in the same quarter of 2025. That gives us a 9.55% increase in current terms. And as the NSB notes, that bump is driven by a combo of both an actual increase in production and an increase in prices across the board. To really understand what's happening under the hood, we need to break down the macroeconomic pie. As you'll see, the services sector absolutely dominates the landscape here, commanding just over 62% of the total GDP. The industry sector follows in second place, with about a 28% share. And finally, agriculture holds the smallest piece of the pie, bringing in 9.74% to the overall economy. So that's our baseline structure. Now, what's really fascinating about this next data breakdown is how the current growth rates completely flip that previous narrative on its head. While services is the biggest piece of the pie by a mile, industry is the actual engine currently driving the growth. Look at that, it's skyrocketed by nearly 14%. Meanwhile, services, our heavyweight, only expanded by a modest 3.76%. In agriculture, it actually shrank, posting a negative 1.40% growth rate. Industry sector, the growth engine. We're transitioning our focus entirely to this booming industrial side of things to unpack what's really going on. When a sector expands by nearly 14% in a single quarter, you've got to ask, what is acting as the growth engine behind the scenes? Well, let's unpack it. The gross value added, or GVA, of the industry sector hit new 19,565.74 million. That massive 13.96% expansion? The NSB specifically points to the electricity subsectors as the primary powerhouse thriving this surge. And because of this phenomenal growth, the industry sector's share of the total GDP actually increased by 0.83 percentage points compared to Q1 2025, bringing it up to that 28.17% mark we looked at earlier. Agriculture sector, a modest contraction. Let's shift gears to the other end of the economic spectrum to explore this contraction. It's super important we look at both the highs and the lows to get the full picture of economic health, right? So, the agricultural sector's performance in Q1 2026 saw a GVA of new 6,765.20 million. Like we noticed earlier, it observed a negative growth rate, shrinking by 1.40% year-on-year. Because of that, its overall relative contribution to the economy slipped. It fell from a 10.26% share last year down to a 9.74% share this quarter. It's a modest contraction, sure, but it really highlights a structural shift away from this sector. Services sector, the heavyweight slows. Let's move over to the services sector to see what's happening there. As the undisputed heavyweight of Bhutan's economy, any movement in services has massive implications for the national numbers. This sector boasts a huge new 43,122.28 million gross value added footprint. That's our roughly 62% chunk of the total GDP. But here's the catch. Despite being the largest sector by far, its growth has significantly cooled down. It expanded by just 3.76% this quarter. That is a really sharp moderation relative to the massive 9.60% expansion we saw in this exact same sector during the first quarter of last year. Historical GDP trends tracking year-over-year economic shifts. Let's move to how this builds over time. Providing this historical economic perspective is just absolutely crucial because looking at a single quarter in a vacuum never tells the whole story. Let's walk through this comparative table. Just look at the dramatic reversal of fortunes between 2025 and 2026. In Q1 2025, agriculture was booming at 7.81%. Now it's contracting at negative 1.40%. Conversely, industry was pretty sluggish at 3.10% last year, and now it has totally exploded to almost 14%. Meanwhile, services dropped from 9.60% down to 3.76%. This perfectly illustrates why the overall GDP growth slowed from 7.80% down to 5.78%, even with that massive boom in industry. It's like a giant puzzle where all the pieces are constantly changing shape. The engine room, how we measure quarterly growth. Let's pivot to a brief look at the methodology behind these numbers. Understanding how we measure this stuff is incredibly important to establish the credibility of this series. The National Statistics Bureau doesn't just pull these numbers out of thin air, They align their estimates strictly with international standards, specifically the Quarterly National Accounts Manual published by the International Monetary Fund. This ensures that the data we're analyzing is consistent, reliable, and can actually be compared on an international stage. The actual compilation follows a very rigorous, four-step systematic approach. It kicks off with identifying annual benchmarks, which is followed by a thorough stocktaking of source data, things like production and sales. Then they select high-frequency indicators to capture those short-term trends. And finally, that culminates in the final quarterly GDP compilation. This process is absolutely vital because it ensures the quarterly estimates maintain perfect consistency with the broader annual national accounts. And this brilliantly illustrates the mathematical engine driving that final step, the basic Denton method. Utilizing the IMF's Excel add-on, it minimizes data distortions. Essentially, it takes those short-term quarterly indicator movements and smooths them out so they fit perfectly within the established annual benchmarks. It's a fascinating principle of movement preservation. It sounds super technical, but it's basically just making sure the short-term bumps align perfectly with the long-term reality. To summarize the core narrative of today's explainer, Bhutan's Q1 2026 economy is characterized by a really fascinating structural tension. On one side, we've got a booming, electricity-driven industrial sector, literally pulling the economy forward. But on the exact opposite side, we have a shrinking agricultural base, all while the massive services sector just kind of moderates its pace in the middle. So, what does this all mean for the future? That leaves us with the ultimate question. Will this structural shift hold steady into the second quarter? Will electricity continue to power double-digit industry growth? And is there any chance agriculture can recover? Thank you so much for joining me for this deep dive. Stay curious, keep an eye on these trends, and I absolutely cannot wait to see you back here for our next quarterly financial check-in.